Hello guys, this is my first video on fundrise. People who don't know fundrise, it is a way of passive investment cycle without much ups and downs of stock market. So in the recent on July 1st, they announced how the fundrise portfolio doing. So I would like to go through that quickly to make sure what they're talking about and then in my opinion how they are doing it. This is not a investment advice. This is not about whether fundrise is doing good or not. This is about my personal opinion, what I am thinking, and I'm going to invest coming future. So you probably know Fundrise has been one of the successful REIT platform for people who is looking to invest without having their own properties to manage. So I have been investing in their portfolio for almost 2 years, and as you can see, I have a big investment portfolio in last 2 years. And then, so just to give you an idea, before pandemic, this rate of interest per day used to be close to $15. So April, May, June quarter, that went to almost $7.50. Now again in July 1st, from July 1st, it went to by $2 up. So what it tells you is the dividend per month they are giving went down by 40% close to, and it's going up a little bit again up from July 1st. So this is the first pandemic that they had to go through, and the economic bust. It's interesting to know how they will deal with it. Will they go down big time? Will they come up big time? How it's going to look in future? So it is there. As you can see, this is July 1st. They gave the latest update how they are doing. I would take a minute, go through this, how they are doing. So basically they are comparing Fundrise, their portfolio, which achieved for the 6 months of the year a 2.41% versus overall stock market. They compare with VTI, and it's a perfect comparison. There is nothing more than a VTI, which is called Vanguard Total Stock Market, which lost about 4.9%, and then public REITs, which is VNQ, which is another Vanguard real estate, which lost 15%. If you really wanted to invest in a stock market in a real estate, this is the one of the perfect ETF. Okay, so if I'm not investing in fundraise, this is what I'll be investing in. So let me show you how VNQ is doing. So remember, they are saying minus 15%. That was July 1st, and this is VNQ. That's what they are talking about. Vanguard Real Estate Index ETF shares. Let's go back to the performance of last 6 months for this. So as you can see, they said minus 15%. Within last 3 days, there was a change. So it went up by almost 3% in last 3 days. So if you look at a 6-month chart, the VNQ was at almost $100 per share. It went down by 50 it went to $57, and then it came back to $80. You can see it's almost like 40% down, and then again almost 25% up. So it's down around 12%, but end of the day, so what I have been doing is I did not invest any new money in fundraise last quarter. So if I want, but I still want to invest in real estate. So I invested around this price range, some money, my money that I am supposed to invest in fundraise, and that has very good appreciation, which is close to 15%. Can it go down more when market goes down? Yes, of course. VNQ is more volatile. Whereas fundrise, as you can see here, is 2.4% up. So in my view, this came up from the pandemic much better, but at the same time, it's much stable way, but the returns are not great. Okay, so it's if you can time the market and invest properly, you would have made a lot more money in VNQ than fundrise. Okay, so but if again in the long term, if you see, let's say 5 years chart of VNQ, as you can see, it was $75 5 years back, you know, and now it's $80. So it's almost there was no growth in VNQ 5 years, but there was a constant 4.1% yield. Okay, so but compare fundraise for the last couple of years, they were growing 8%, 9% every year, and then including the dividends. So I would say fundraise did better compared to VNQ, but at the same time, you know, you have to compare. They are different things, so you can't really compare. But hey, I would have made stable portfolio in fundraise than VNQ. So VNQ, your stock price in the last 5 years would have operated like 5 to 10%, but you are getting 4% solid yield. Okay, so that is the comparison. Okay, now comparing, so okay, going back to there, so they're comparing against stock market and VNQ, and what they're saying is they did better compared to both of them, which is 2.4%. So what I felt was obviously they have to make sure that the way they present, they're doing better. You know, I mean, every quarter, every year updates, that's how they show it. They compare with the stock market. Last year, for example, stock market up, S&P 500 up by 30%, their portfolio is up by 8%. So that and that time they said like, hey, we are much stable, low passive income platform, that which is absolutely fine. Um, so these are the key takeaways they are saying. I completely agree. There is a truth to it, but my main concern was, can I lose money in fundrise some other portfolios, right? So yes, obviously, if you can see my portfolio performance for last this quarter of um, this is 2020 portfolio performance, and this is quarter two. As you can see, quarter two, one of the portfolio, one of the E-REIT that lost money was called Heartland E-REIT. This particular Heartland E-REIT is the one they invested in Las Vegas mainly, and Las Vegas market went down pretty much in last couple of months. This is the reason why they are showing minus 1.8%. And then another one was Growth E-REIT 2019, which is down by minus 4%. So even though most of the funds went up, yes, obviously some funds can go down, but overall still the growth is 2%, which is not at all bad during COVID. So given that overall year to date is only up by 3.5%. At this rate, maybe my end of the year could be 6 or 7% total returns. I'm not sure. And they also mentioned that, so if you look at here, why, yep. So that's where they mentioned all but two produced either neutral or positive change in NAV. The only single fund experienced a negative returns driven by assets it holds, which is based in Las Vegas. Yes, so to answer your question, not question, but to answer my question whether they can go down, yes, they can go down. And then, and yes, they can go down. And also, if it goes like, for example, right now, even though pandemic came, there was not much impact in most major parts of the US in real estate yet. So VNQ is about stock market. So VNQ is always, stock market always predicts what is going to happen to real estate in next 5 to 6 months. So whereas fundraise is not, it is what it is. So it's always going to show the current situation. So if next 6 months market going to go down, obviously fundraise portfolio going to go down on their funds. Obviously, the reason why I'm investing in fundraise is for my passive income. So if they reduced my dividends by 40%, that's one concern for me. And at the same time, they are not doing on purpose. They have to do make sure like they manage their funds very cautiously. So these E-REITs, they have to give 90% of their returns as dividends to customers. So if the market still holds good, some of the money I'll get back by end of the year, but it looks like my rate of return is going to be a lot less compared to last couple of years. Okay, so what else? One thing, then I asked a bunch of questions why I am getting so low dividend, and they, in fact, they took a lot of time and they answered my questions. I would like to show those response. So this is my question. My question is about, I was asking why dividends are less. Can the dividends go up before March period? So their response, as you can see here, they had a very detailed response, and they are saying they will reimburse by the end of the year, and it depends on how the market's doing and how much money they are getting. And also, as you can see here, they're giving a full breakdown. Okay, if you click on the full breakdown, which is given in April 3rd, so what they are saying is, this is how they break down. Basically what they are saying is, so how they in real estate, they have close to $1 billion portfolio. So out of which almost like 430 million dollar are in fixed income real estate, which could be the apartments, CD construction, bridge loans, right? So which is $430 million. So which means they get continuous income from rentals or from dividends from this portfolio, and the rest is growth. Commercial, mixed development, apartment stabilized, and all those things. And you can see almost 16% of their portfolio, $170 million, is in cash. That is, obviously they'll be investing that in government market funds, as you know, the interest. So this is almost making no money. So this will be like a drag on the portfolio. The reason I observed last couple of months, the interest rates were going down. And if you're following their portfolio, their news updates, almost a lot of their clients whom they invested money to, they're paying back and they're refinancing, because fundrise was almost charging 7 to 9% interest with them. Because of the interest rates going down, they're paying off like $5 million to back to fundrise ahead of this period, and then they're refinancing that loans, which means it's the drag again on fundrise portfolio. That's last couple of news updates. That's what I've been seeing. In my next video, I will show what they are talking about those. So in summary, don't expect too much from fundrise. So if you are depending on the passive income from fundrise, make sure you have other options you are thinking in. You are knowing not going to get probably same as last couple of years that they are giving in passive income. So think about alternatives. And if you like my video, please pass on the comments, please share and subscribe to my channel. Thank you. And in the next video, I will show how to maximize your passive income fundrise. Do not use their automated investing. You can usually lose a lot of passive income if you use their automated investing. So keep on waiting for my video, how to figure out which investments or which e-REITs give you the maximum rate of return and how to invest specifically into those. Thank you for watching my video.